In this video, I want to talk about 3 mid-cap stocks investors are saying to buy right now for both short-term and long-term potential, so you can go and do your own due diligence and research on them and see if they are worth buying into right now. So stock number 1 will be a $3.5 billion market cap stock with 4x potential. Stock number 2 is a chip packaging stock with long-term growth potential. And stock number 3 is a pharmaceutical company with up to 200% upside in the next few years. So my name is Pierce. I am the founder of InvestorWaves.com, where we track all of the investors across YouTube and newsletters and pull in all of their trade ideas automatically, so you can get more information and trade ideas for stock and for your portfolio. And we track all of the top investors on the site. And you can see just in the last few months, we've had one trader plus 61%, another plus 23%, all the way, down to 5, 7, 8, 9% just in the last month. So getting into the first stock here is going to be VAL, ticker symbol VAL. It's a offshore contract drilling company operating a fleet of ships kind of off the Gulf of Mexico, Brazil, Middle East, all across the world, right? And in InvestorWaves.com, we actually caught an article with a bullish trade call doing a deep dive on the company. Here you can go to the InvestorWaves.com VAL stock page, and it's Deep Value Capital, who is a great newsletter for deep dives on companies, and they have actually talked about Valaris, the name of the company here, which is down 3% today, down a little bit in the past 5 days, but up on the month. And they've had some solid growth this year, currently sitting at $54 a share. But this company, or rather this newsletter, has highlighted Valaris as a potential buy because it is the world's second largest offshore drilling contractor by fleet size, and they have a clean balance sheet. Their assets, which are their rigs, their ships, are high spec, and they are really well positioned to capitalize on the offshore oil boom that is projected to be coming later this decade in the 2020s. And Deep Value Capital has actually said that he expects this to go to $250 plus per share, which would be more than 4x the price of what we just said, about $55, $56 per share within the next 5 years. So it has high potential to grow, and they have many different types of ships, 13 drill ships, 2 semi-submersibles, and 26 jackups for shallower water. And like I said, these are high-spec assets. So it means if you're not familiar with this kind of industry, it does matter that they're modern and high-spec because customers pay more for this type of equipment to be reliable, safe, and efficient. So that's kind of an overview on their fleet. And it's an interesting play because oil has actually, and really drill ship day rates in the last few months has really started to climb exponentially here. Drill ship day rates have actually hit over $400,000 a day last month, and there's not a lot of new drill ships coming, so it's kind of setting up for a high demand, low supply kind of market here. And Carell here on X says VAL, ticker symbol VAL, is pure leverage to the tightest market in oil. So each dollar higher in drill ship day rates, which they make their money leasing it out, is going to go straight to Valaris's bottom line. And because of this, they're kind of positioned for this multi-year upcycle in demand for offshore drilling. And they have the balance sheet, they have the leverage, and especially if oil prices and things like that stay robust, this could be a really bullish stock in the next few years. Of course, all stocks come with risk. Risk here include, normal, potential short-term demand softness. Maybe this up into the right chart cools down a bit, but go read the deep dive here from Deep Value Capital with a detailed write-up on the offshore oil driller. And so that will be stock number 1. Getting into stock number 2 here is Amcor. So ticker symbol AMKR. And what Amcor does is they are kind of in that final stage of semiconductor chip manufacturing. So here on the idea we caught on Investor Waves from Six Sigma Capital, they were actually talking about the actionable stock setup for Amcor and how they expect it to ramp up here in the next few years, particularly in late 2028 to early 2029. But what Amcor does is they both package the chips, and that's the first part of it, and they test the chips. That's the second part of it. So with semiconductors, there's a lot of different advanced packaging technologies, from the flip chip packaging, wafer level packaging, and so on. And then they also provide comprehensive testing services to companies to ensure the chips are fast, reliable, and will perform essentially in production. So they're at the final stage of chip manufacturing, which is extremely important. And they have a lot of major customers. So this isn't a stock that, is some micro cap with startup-esque kind of stock. It's an $8.97 billion company, currently trading at $36 per share. And their customers are customers like Apple, NVIDIA, Qualcomm, the big mega cap companies. And Apple actually does represent over 30 to 40% of Amcor's total revenue. So you could see that as either a risk or you could see it as a bull case, because there is some customer concentration risk if Apple decides to ever, go in a different direction or stop being a customer of Amcor. Or you could see it in as a pro that if Apple and NVIDIA and these people trust Amcor to produce and test for them, then it's a good thing, right? You could see it as a bullish signal, and maybe they are able to land some other very large contracts. But getting into more of the growth trends behind it, the automotive sector, the consumer and Internet of Things tailwind, smartphones and tablets are some of the big kind of discussion points behind Amcor. So as the automotive sector transitions from, the traditional gas-powered car to more electric and modern cars that are more like a computer on wheels, you could say, or kind of just this EV type car is going to be the standard. If you believe in that, then this is going to be a key growth driver for Amcor, because the automotive semiconductor market is expected to grow from about $70 billion this year to approximately $130 billion by 2035. So their actual automotive revenue for Q3 of this year was 16% of revenue. But if this demand for automotive semiconductors, continues to grow like Gartner predicts here to that $130 billion market, then that could reach, a much more substantial part of their revenue, and that segment could continue to grow. And the same things could be said for these other sectors like smartphones, like tablets. And so that's kind of the big bull case for a company like Amcor. But if you're more looking at kind of the downsides and the risks, is semiconductor demand can be cyclical, kind of like the same thing we were saying with Valaris. And as capital expenses ramp up, margins obviously come down a little bit. And bears, if you're bearish on this stock, would maybe argue that in a bull cycle, we're not in the bull cycle yet. But excuse me, if we are in the bull cycle yet, the gross margins and operating margins remain underwhelming right now. So maybe that could be a bear case for the stock, but they have a great management team in place with Jill Rutten here, joined Amcor in 2014 as president and CEO. But really what's interesting from here, from Six Sigma Research, is that at the time of writing, market cap of about $8 billion, like I said earlier, but they have a kind of an estimate on Amcor here of what could be in the next few years. Right, this is a 5-year minimum kind of looking at play, but they believe it to be a very strong stock pick, because companies like Apple and these big companies don't just commit to these big billion-dollar projects lightly. So it's not likely that they're going to be going around anytime soon. You have the structural tailwinds in the specific chip adoption, AI, all these things are acting as these decade-long tailwinds rather than just something that's going to die out. It's just not likely to die out in the short term. And then they also have government support in a CHIPS Act, specifically getting funding and political support. So they have big companies behind them, and they have the U.S. government. So, I mean, it's hard to get much more proof of buy-in than that for Amcor, which is very interesting. But that's going to be the second stock, which is Amcor Technologies, AMKR. And getting into the third stock here, which is Harrow Incorporated, ticker symbol HROW. And they're in the pharmaceutical business. They are a branded pharmaceuticals company, and the branded pharmaceuticals actually represent the largest part of their business model. They do have some other revenue streams and diversification there, but they actually don't produce or discover new products, but they actually acquire and license and kind of go to market drugs that are already FDA approved or in late stage development. And they have kind of this existing infrastructure for distributing these products, which allows them to kind of build a scalable base, so they can kind of just rinse and repeat this scalable system of acquire, license, distribute, sales, and it allows them not to have these expensive new build outs and go through all of the FDA approvals and all these things. But going over here to Investor Waves for HROW, this is coming from MV Kunis Substack, where they believe it is one of the most compelling opportunities in the market right now for investors kind of looking for a stock that's not just your regular technology-based stock, maybe like an Amcor, but looking into other sectors. And recommend you go read this whole article here. But really, Harrow is a product of the eye care business, right? So all of their products kind of revolve around dry eyes, retina, all parts of the eye, and they're currently sitting at a $1.34 billion market cap, trading at $36 per share. But their revenues and their margins, they just continue to grow, right? So you can see every year since 2020, it just continues to grow. And their kind of core growth drivers going into 2027, the next few years, are expanding this branded product business in the eye sector, just expanding, right? Just continuing to grow revenue year over year, quarter over quarter, and also entering the multi-billion-dollar retina market. So the retina market is kind of what's looking to be Harrow's next major growth engine. They're planning to launch 2 new FDA-approved products in that sector, and they have this huge kind of commercial infrastructure already in place, like I was saying, which will kind of naturally allow them to continue expanding their sales force, launching new products, and growing their revenue. So that's the numbers and kind of the growth drivers on Harrow. But getting into the valuation, like I said, about $1 billion market cap company, but they do expect to exceed 250 million in quarterly revenue by the end of 2027. So Q4 for them is typically the strongest quarter of the year, about 29% of the full year revenue. And if you assume 20% year over year growth from 27 to 28, that would imply about 300 million in Q4 2028 revenue. And so applying that same ratio of 29%, 30%, total 2028 revenue would surpass 1 billion. Okay, so all of this coming from MVC Investing here in Substack. But with these estimations and everything, they said they genuinely believe that $112.50 a share is a realistic case for this company, currently trading at $36 a share, right? So it's very interesting to kind of do the math and look at revenue growth and where their upcoming product launches are. But if these estimations do play out, obviously do your own research, look at the downsides and the risk. It's interesting to think about, but downside could be limited and upside could be very significant, right? It just is a matter of time and playing out. But recommend you go read this article here from MVC Investing. And just a quick shout out, and if you enjoy this content and you want to get stock ideas straight to your email newsletter, every day I send out 3 every single day to your email completely for free. Just click the link in the description or go to this link here and enter your email to receive that. And let me know what you think in the comments below about these 3 companies, and I'll see you in the next video.